So you're thinking about maybe navigating the crypto markets in 2024. Well, you've come to the right place. Today, we're doing a deep dive into this podcast by Nico, a crypto trader.
Oh, yeah, I listened to that one.
Yeah. He shared his 3 main trading strategies on November 26th. We're going to unpack what he's doing, why it might be working, and what you might find useful, even if day trading isn't really your thing.
Yeah, and it's worth noting that Nico's podcast, it's like a snapshot of the crypto market, right?
Oh, yeah.
Like he's talking during a bull market, which definitely colors the strategies that he's talking about.
For sure, for sure. All right, let's jump into it. So Nico kicks things off with what he considers to be the simplest approach, especially in a bull market. DCA, dollar cost averaging. Basically, you invest a fixed amount of money at regular intervals, no matter what the price is.
Mm-hmm.
He even had this funny part where he was talking about how DCA used to be called averaging down in traditional markets, and it was actually seen as a bad thing.
Oh,
Yeah. But in the crypto world, it's become a super popular strategy.
It's interesting, that shift. Because in traditional markets, averaging down, it was often a sign that you were trying to salvage a failing investment or something.
Right.
But with crypto, it's so volatile, and it has this potential for massive growth over the long term.
Yeah.
So DCA is more about just riding out those dips,
Yeah.
and then reaping the rewards when the market comes back up. What are your thoughts on that?
Totally. It makes a lot of sense to me. If you believe in the long-term potential of something like Bitcoin, DCA just feels like a way less stressful way to enter the market.
Yeah.
You're not trying to time those peaks and valleys perfectly.
Exactly. Yeah, it takes the pressure off trying to be like a fortune teller or something.
Totally.
You're playing the long game with this one. You're not gambling on those short-term price changes. But, of course, it does require you to be patient.
Yeah.
And like you said, you have to believe in the future value of whatever it is you're putting your money into.
Definitely, definitely. Okay, strategy number 2. This is what Nico calls swing trading on the spot market. And his big thing is spotting trends and following what he calls smart money.
Smart money.
Okay, using on-chain data analysis. And he gives this example from just the other day, November 25th. He says there was this arbitrage opportunity between Bitcoin and Ethereum.
Huh. Interesting.
So what exactly is smart money, and how does this whole arbitrage thing work?
So usually when people say smart money, they're talking about these big institutional investors or really experienced traders who, they just kind of have a deeper understanding of the market than the rest of us.
Gotcha.
And so Nico's tracking what they're doing by looking at this on-chain data, which is basically, it's like a public record of all the transactions that are happening on the blockchain.
Right, right.
So he can see where these big players are putting their money, and he's trying to kind of get an edge.
So it's peeking over the shoulders of the pros to see what cards they're holding or something.
Exactly, yeah. And that arbitrage opportunity that he was talking about, it's basically taking advantage of the fact that sometimes the price of an asset can be different on different exchanges.
Oh, okay.
So let's say you could buy some Bitcoin on one exchange where it's a bit cheaper, and then you immediately sell it on another exchange where the price is higher.
Oh, I see.
That's arbitrage.
Gotcha.
In this case, the difference in price was actually between Bitcoin and Ethereum.
Yeah.
Which suggests that those big investors, they were moving money between the two.
Interesting. So swing trading, this is more about timing the market, right? And taking advantage of these short-term price moves. You have to be a bit more hands-on with this compared to DCA.
Yeah, absolutely. It's way more active. You're not just holding, you're doing research, you're looking at charts.
Yeah.
You're trying to predict price movements.
Right.
It definitely requires more of an understanding of the market, and the ability to actually read and understand the data.
For sure. And of course, you need enough capital to actually make those moves when the opportunity pops up, right? You can't really do this with pennies.
Right, yeah. The potential returns with swing trading could be much higher than with DCA, especially when the market is as jumpy as crypto.
Yeah.
But the risks are also higher.
Yeah.
So you need to be okay with that.
Okay, so strategy number 3. This is where things get really interesting, at least according to Nico. He calls it scalping with order flow and on-chain data. And he gets so excited when he talks about this. Yeah. He describes it as high risk, high reward, very short-term trading.
So this is minutes we're talking.
Yeah, seconds or minutes, maybe a few hours max.
Wow.
He emphasizes being super focused and using data to make split-second decisions. And what really stood out to me was this thing he said about how no matter how much Bitcoin is going up or down, he still sees these consistent patterns in how the market is made.
It's interesting. How does he explain that?
Well, that's where the order flow and on-chain data come in. These tools, they give traders this inside look at the market,
Hmm.
like order flow. It tracks all the buy and sell orders that are being placed. And the on-chain data can actually reveal where large amounts of cryptocurrency are moving.
So if you can understand these patterns, you can kind of predict where the price is headed next, even if it's just for a few seconds.
Exactly. Yeah. It's like reading the mind of the market, or at least trying to predict its next move.
Okay. But that sounds pretty complicated.
Oh, yeah, definitely. This isn't something you learn overnight.
Yeah.
Scalping requires a ton of skill and an even higher tolerance for risk. This sounds like it's probably best left to the pros, or at least people who have a lot of experience.
I would agree with that, yeah. Not for the faint of heart.
So before we wrap up this part of our deep dive, Nico brought up something that I thought was really interesting. He was talking about how the crypto market is changing, and all these new financial products like ETFs and options are starting to appear in the crypto space.
Yeah, I've noticed that too. I mean, traditionally, those have been the tools of like big institutional investors, haven't they?
Exactly. And he even mentioned that some countries, including the US, are buying up Bitcoin now. And he called it part of a strategy to like save their economies.
Wow.
It's a pretty big statement. It all feels really unpredictable right now, but also kind of exciting,
Yeah, there's a lot of uncertainty, even with the bull market that we're in.
For sure. So we've got these three distinct strategies. DCA for the patient long-term investor, swing trading for the more active data-driven trader, and then scalping for the high-risk, high-reward, like adrenaline junkies.
Yeah, and that's a good point. There's no one-size-fits-all approach here. The best strategy for anyone listening is going to depend on their risk tolerance, how much time and energy they want to put in and what they're actually trying to achieve.
That's a really good point. But with the crypto landscape changing so quickly, who knows what new opportunities or challenges are right around the corner?
That's what makes it so interesting. It's always evolving. One thing that really stuck with me from Nico's podcast was how much he talked about the psychology of trading,
Oh, yeah.
especially in a crazy market like crypto.
For sure. He mentioned FOMO, right? That fear of missing out.
Yeah.
It seems like that drives so many decisions, especially when everything's going up.
Yeah, and he even told a story about how he was like aiming for Bitcoin to hit $50,000 back when it was around $27,000,
Yeah.
$30,000.
Wow.
People thought he was crazy, but he stuck to his guns, and
Yeah.
well,
He was right.
we all know what happened.
Yeah, it just goes to show how much emotions can affect things.
Huh?
Even for experienced traders, you can get swept up in the hype.
Yeah, for sure. It's so important to have a plan.
Mm-hmm.
It helps you stay grounded when things get wild.
Yeah, so let's go back to these strategies and bring them down a bit more, starting with DCA. Nico really emphasized how simple it is. He even compared it to like buy and forget. You just invest small amounts over time and let the market do its thing.
That's the beauty of DCA, especially for people who are new to crypto.
Mm-hmm.
You don't have to worry about timing the market perfectly,
Right.
which is, let's be honest, almost impossible,
Yeah.
even for the pros.
He did say that DCA can be tough during a bear market, though,
Right.
when it feels like you're just throwing money away.
Yeah, you got to have discipline and patience with DCA. You have to have a long-term outlook. You can't let emotions get in the way.
Nico actually said he's been using DCA for years.
Really?
And not just with crypto. He mentioned gold and silver, too.
Huh. That's a good point for our listeners.
Yeah.
DCA isn't just for crypto.
Mm-hmm.
It can apply to other stuff too.
Yeah. Okay, let's move on to swing trading. Nico's approach seems very data-driven.
Yeah, definitely.
He talked about tracking the smart money and analyzing on-chain data.
So basically following what the big investors are doing.
Exactly, and that's a key difference between DCA and swing trading.
Right.
Swing trading, you have to be more engaged with the market. You're using data and analysis to find those entry and exit points.
He gave that interesting example about Bitcoin and Ethereum on November 25th.
Yeah.
Remember that?
Yeah.
Bitcoin was selling off while Ethereum was surging.
Oh, yeah, he said that was big players arbitraging between the two.
So you have to understand the whole market, not just the price of one thing.
Mm-hmm.
Stuff like Bitcoin dominance matters here. And swing traders need to understand how money moving between different cryptos can create these opportunities.
It sounds like you need to really understand how the market works to be successful with swing trading.
Yeah, you got to be able to read the data.
He said you can do it on the spot market, so you don't need leverage or anything.
Yeah.
But you do need a decent amount of capital.
Yeah, the potential rewards are higher than DCA,
Yeah.
especially in a volatile market,
Mm-hmm.
but the risks are higher too.
Okay, finally, scalping.
This is the fun one.
Yeah, you can tell he's really passionate about it.
Uh-huh.
He even called it surgery.
What?
Yeah, to emphasize how precise and focused you have to be.
You're in and out so fast.
Yeah, just seconds or minutes.
What I find interesting is how much he relies on that order flow and on-chain data.
Mm-hmm.
He thinks it can show you these patterns that can help predict price moves.
He made this crazy claim. He said that no matter how volatile the market is, the control exerted by market makers is consistent.
So they're always in control.
Yeah, it's like they're operating on a different level.
It's almost like they're one step ahead.
It's fascinating, but he was also very clear that scalping is not for everyone.
No, definitely not.
It's super demanding, you need fast reflexes, and you can't be afraid to lose money.
Yeah, you could lose everything in a second with this.
He didn't sugarcoat it at all.
So this is really for experienced traders who can handle that kind of pressure.
Exactly. It's interesting how he tied the scalping strategy back to the bigger picture of the crypto market evolving.
Mm-hmm.
He mentioned how all these new financial products are coming in, like ETFs and options.
Yeah, and those have always been the tools of the big institutions, haven't they? That could really change things.
He said it could lead to a more stable market, which could bring in more investors.
That's true. People might be more willing to invest if it's not so wild.
But he also acknowledged that these new players could make things more unpredictable in the short term.
Oh, of course. Yeah.
It's like they're adding more variables to an already complicated situation.
And that brings up a good question for our listeners.
Right. How are these trading strategies going to adapt as the crypto market keeps changing?
Will DCA still work if things become less volatile?
Well, swing traders need to change their methods to compete with the big institutions.
And what about scalping? Will it get even more intense?
Those are all good questions, and we'll have to wait and see.
Yeah.
One thing's for sure, crypto is never boring.
That's the truth. It's always changing.
You have to be ready to adapt.
Absolutely. Yeah, it really does feel like we're at this turning point for crypto with all these new people and financial products coming in.
Totally. It makes you think, like, what's it going to take for crypto to really hit the mainstream?
Yeah, beyond like just the early adopters and the hardcore traders.
Right.
That's the big question, isn't it? I think one of the biggest things holding it back has been accessibility.
I agree.
You know, for a lot of people, crypto still feels like this really complicated, kind of scary world.
Yeah, it can be pretty intimidating.
But if you think about it, Nico's DCA strategy, that's already a step towards making it more accessible.
Yeah. Oh, for sure.
It's a way for people to like dip their toes in,
Yeah.
invest gradually, maybe benefit from the long-term growth without needing to become an expert on the blockchain overnight.
I like that. Dip their toes in.
Yeah.
Yeah, that's a good point. It definitely lowers the barrier to entry.
Right. Which could be huge in getting more regular people interested.
Totally. And as more banks and stuff get involved, who knows? We might see more of those user-friendly platforms and products that could make it easier for people to buy and sell their crypto, manage it all.
Yeah.
It's interesting to think about how these strategies might change as the market gets more, I don't know, mature.
Yeah.
Could we see a hybrid approach, like combining the long-term DCA with some of those more active swing trading moves?
That's totally possible. As the market changes, traders are going to have to adapt too.
Right.
And who knows, maybe we'll see completely new strategies that we haven't even thought of yet.
That's exciting. It's like uncharted territory.
Yeah.
But we can't forget about the risks. Nico was pretty straightforward about that.
Oh, yeah. There are no guarantees with crypto.
Definitely. You could lose it all.
It's so important to be level-headed, do your research, don't invest more than you can afford to lose. That's key.
Totally. And it's easy to get caught up in the hype, but you got to have a long-term perspective.
Absolutely don't chase quick gains.
Yeah, discipline, patience, a willingness to learn.
That's how you succeed in any market.
Especially one as crazy as crypto.
Yeah, exactly.
So to wrap things up, we've talked about these 3 trading strategies.
DCA, swing trading, scalping.
Each one has its own pros and cons, and the best one for you, it really depends on your goals, your risk tolerance, and how much time you want to spend on it.
Absolutely. And no matter what, knowledge is power. The more you know about the market, the better off you'll be.
So keep learning and exploring this crazy world of crypto.
Exactly. It's constantly changing, but that's what makes it so interesting.
Thanks for joining us on this deep dive.
Yeah. Thanks for listening, everyone.
Until next time.